Hey, this is Billy with Digital Realty, and today we're going to go into a super hot topic, which is there an impending market correction? Stay tuned. We're going to look at the data, the analysis, the headlines, and everything involved with this topic. Yeah, so that was the sound of inflation continuing to balloon. So in this past month in May, last week, the inflation numbers were reported in at 8.6%, and that's the consumer price index, which is tracking inflation, how it affects the consumer. So that is wild. I mean, that is after the Federal Reserve has increased interest rates a couple times this year. The analysts and economists were expecting the number to be 8.3%, which is in line with what it was the previous month in April. So as a result of these numbers, with the inflation that came in at 8.6%, the Federal Reserve voted to do a move which hasn't happened in over 40 years, which was increase the interest rate by 0.75%. A lot of people were expecting the rate to be an increase of 0.5%, but because the inflation numbers are just continuing to run wild, the Federal Reserve had no choice but to jack up the rates even more to try to help get control of inflation. And while 8.6% may not sound like a lot, year over year, that's a lot, but if you actually take a look at this chart here, the numbers are even more dire. So that's a spectrum across all of the things that consumers can be purchasing. And if you look at the things that you're going to be spending most of your money on, so you may sound familiar as gas, wheat as in bread, corn, cotton as in clothing, oils and gas, coffee, sugar, butter. I mean, all the things that we're buying at the grocery store. This isn't even accounting for real estate. It's a pretty scary picture. You can see that inflation is just out of control right now. So this is why we're expecting to see things are going to be slowing down. The Federal Reserve's got no choice but to just keep jacking up these interest rates until these inflation numbers start to come down, because otherwise it's definitely not going to be good for the economy either way. So just to give an overview here again, the inflation data for the month of May, which was reported in June, came in at 8.6% year over year for the same month. And that was way higher than they expected, considering they'd been jacking up the interest rates. They did it 0.5% in the last meeting, and now as a result of the newest inflation data, they did it 0.75%, which was the first time since 1994 they did such an increase. I wouldn't be surprised if more rate increases like this are on the table, if they do another one or two of these 0.75% rate bumps throughout the rest of the year. Just to give a sense for what other people are thinking, especially some of the CEOs and leaders of different industries, 60% of them now think that we're going to be in a recession in the next 2 years. So this is just, again, not trying to scare anybody. We want to have all the data out there and available, especially if you're a home seller. We do not want to be wasting any time, taking our time putting your house on the market. Now is the time to definitely get it on before rates jack up even more and there's more downward pressure on your home. And onto the topic of job cuts. So when we see major layoffs happening, that's usually another indication that things aren't going to be going well for the economy. This especially links back knowing that in our previous headline that 60% of CEOs think that there's going to be a recession in the next 2 to 3 years. So some notable ones in the real estate industry include Redfin and Compass, which are two real estate brokerages. They're laying off a ton of employees. And they're basically just seeing that there's much less demand for their services. Redfin said in their announcement that there's 17% less demand for their services in May than they even anticipated, which they also anticipate a little bit lower demand. And also in a tangential space in the crypto world, which we don't really cover a lot here, but Coinbase, which is a major crypto brokerage, which allows people to buy and sell cryptocurrencies like Bitcoin, they're laying off a huge percentage of their workforce as well, basically preparing for what some are calling the crypto winter, in which is just a massive sell-off of crypto, especially with the fears of a recession coming. So again, if you're thinking of selling a home, the recession, like the stock market's down, but in terms of housing prices, things are still relatively stable in the greater Boston and Southern New Hampshire areas. So there's still a window to get your home on the market and sell it for the high price that you can before the interest rates continue to go up and put downward pressure on the home prices. And speaking of interest rates, you can see in the chart here that from the last 2 years, interest rates are going in one direction, which is up and to the right. And again, this is really reactive to the inflation that we're seeing. So the Federal Reserve is going to continue to increase interest rates. They've pretty much laid out their hand and said, like, hey, we're going to keep cranking these interest rates between 50 basis points and 75 basis points throughout the rest of the year. They're expecting an increase of 1.75 to almost 2 percentage point increase from now, June, through the end of the year for 2022. So interest rates are only going to get higher. I wouldn't be surprised if by the end of the year we're seeing interest rates in the 7s or 8s, which is pretty incredible to think about. That interest rates can go up almost 5 percentage points in a single year. But again, with inflation out of control, what are you going to do? So yeah, we're seeing that interest rates are starting to finally have a little bit of a material impact on the real estate industry. And stay tuned, but definitely reach out for if you're thinking about buying or selling in a particular area. We can totally deep dive with you to get more info on that. And now the $1 million question is, all right, you're talking a lot about interest rates. So how does that actually have an impact, and how does that put downward pressure on home prices? Well, as we can see here, so for every 1 percentage point that interest rates go up, that's the equivalent of home buyers and prospective home buyers losing the purchase power of $50,000. So that's like if you currently are looking for a home, you've got a budget of about $800,000. Now, if it's taken you a couple months, like say 5-6 months, for example, interest rates have gone up 1 percentage point. Now, instead of $800,000, you're able to only afford $750,000. And that's because the amount that you're qualified for has to do with what your total monthly payment is allowed to be. And as the interest rates go up, the larger percentage of your monthly payment is going to have to go towards interest. So this is how that interest rates are going to be putting downward pressure on home prices, because as interest rates go up, that continues to just erode buyers' purchase power. So I just want to say thanks so much for watching. If you're interested in how the housing market may be shifting with different things going on in the economy, definitely like this video. We really appreciate that. Subscribe for more videos. We're going to be watching everything really closely as we're really in tune with the market, and keep an eye out for more videos that we pump out. Talk to you soon.